Well, happy Monday morning. I hope you're doing well out there. I hope you had a good weekend. I'm Marlon Bowling, your tour guide to the ag commodities. And thanks for joining us here. We are joined by Brian Hoops, president of Midwest Market Solutions, this morning as we get ready to kick off a new week. Brian, if we take a look at our overnight trade here, it looks like we had a little bit of an upward move on the corn and soybeans. However, the corn really came off of its overnight highs. We had September corn finishing 2.75 higher, and December corn was up 2 3/4. It was off of its highs by about, anywhere from 10 to 11 cents or so. That wasn't overly encouraging to see that kind of action. In soybeans, we had September up 18.5 at 13.81 1/4. November 22.5 higher at 13.75 3/4. Now, I noted where on the overnight minute-by-minute charts, it looked like corn was closer to the bottom of the trading range overnight, while soybeans were closer to the high of the trading range. Interesting developments there. In the wheat, we go to Chicago, and we had September dropping a nickel at 6.08 1/4. Now, that was off of its overnight high by about 12 cents, so that's significant. December was down 4 1/4 this morning. In Kansas City wheat, September was down 9 1/4 at 7.44 1/4. It just can't seem to get any traction. Had a high of 7.61.5 overnight, so it's off of that by 17 cents again. And December was down 9 3/4 cents. Meanwhile, in the Minneapolis wheat, the spring wheat, we had September down 6 3/4 at 7.96. December down 6 1/4. And on the cotton market, we had that new crop December up 94 points. At 84.56 per pound. New development, new news just came in off the wire right before I came in the studio. We did have some overnight sales, Brian, and a couple of batches this time. This time it was soybeans to unknown destinations. The amount, 159,350 tons. And we sold some corn to Mexico again, 111,770 tons. There they go with those uneven numbers again. So anyway, a couple of nice batches of grain sold over the weekend before we hit this morning. Now, this news just came out. It was after the overnight session closed up, but do you think that'll have any impact today?
Good morning, Marlon. Well, as far as impact goes from these export sales, probably not a lot. You know, we're really focused on the heat this week, the Pro Farmer Tour that begins this week. It's going to be very hot. And boy, I think it's going to be miserable for those people out there in the tour. They're getting a very early start trying to beat that heat. But it's just going to be miserable, I think, for them. There's going to be a lot of variance, I think, in these corn yields as they're starting to uncover some out of Ohio that looks to be really good. Probably going to find some really good and really poor in South Dakota. We've heard some reports and seen some harvest in Kansas already starting because of the heat is pushing crops along with maturity, and a lot of silage starting to be cut, trying to get ahead of the extreme heat that they're going to see this week. You also have September options expiring on Friday, and those could be a major impact for the marketplace. But, soybeans rallied last night and went and filled its gap at 13.79. The corn market rallied right where it should have and stopped right where it should have, up around 5.06. There's a lot of resistance there, and we touched it and backed off by quite a ways, especially with the wheat pulling the corn market down. And, wheat started stronger on news that the Ukraine launched some drone strikes against Russia, and there's just a lot of things moving this morning. But I think the big focus will be on the weather and how long this heat lasts. It could certainly hurt soybean yields, and we're pricing a lot of that in already. And then what this Pro Farmer Tour uncovers, if it's a crop that is going to be much different than what the USDA has said so far.
Well, obviously, the weather this week could have an impact on soybeans. The question is on the corn. How far along is the corn? Would it still have an impact on the corn or not? And it seems like maybe that crop tour would have a little more impact than it normally would this year just because of the status of the corn.
Yeah, I think the trade will really be watching this week as far as what type of yields that we are receiving and kind of compare them with the state-by-state USDA numbers, because we expect to see a lot of variance. I've seen some reports already out of Ohio that suggest this yield looks really good in that part of the country, but that long ways to go before Thursday when they kind of shut things down. definitely the heat this week will adversely impact soybean yields. I don't know that it's going to hurt corn that much. What it will do is speed the maturity of it, and then we don't have to really worry about an early frost in a lot of these areas because of that extreme heat's going to push the maturity much faster. As I said, they're harvesting corn in southeastern Kansas already.
And it sounds like there may have been an agreement about insurance coverage of vessels going into and out of Ukraine or in the Black Sea region area. That may be pressuring some of the wheat market this morning, too. We'll come back in just a moment here, Brian. I want to get your thoughts on what to expect in our livestock trade. Remember, we have that cattle on feed report Friday. We'll talk about that right after this. All right, and we're back with you, and we're talking with Brian Hoops of Midwest Market Solutions. All right, Brian, talk to me, if you would, about the outcome of that cattle on feed report that came out Friday after the market closed. The placements number was quite a bit under what we had, or what the trade had anticipated. Talk to me about that and how much impact that could have today, because I believe the market rallied into that report.
We did find some short covering, after midday when the cutouts values were higher, and then we started to rally kind of in short covering just in case that report would end up being bullish, which I thought it was. 98% on feed is below trade estimates and, a supportive number, but the placements was, I thought, going into this report, kind of the real wild card. We only placed 91.7% of a year ago numbers, and that is very bullish compared to the estimates. It tells us that, the rains that came in July and early part of August were, enough of an incentive to hold back some of these animals, keep them on grass and pastures for at least another month. So those animals are probably out there, but just sitting in the grass and not being placed into the feedlots. So, it could be kind of a quick reaction to this market. This numbers here, market reaction, maybe a little bit stronger in the December, February contracts, and then we could start looking at where this week's cash trade is going to be. Now, with the cutout values moving higher last week, packer margins have been restored. They're back in the black, about $44 a head. So some bullish numbers, I think, in that respect, and ideas that maybe the cash trade firms up this week. There's already talk about increasing kills this week. Last week we came in about 613,000 head versus 603 the week prior, and now we're hearing talk 625, maybe even 630,000 head killed this week, which isn't a bullish number, but it's an improvement over what we've seen, and that's a direct result of these cutout values moving higher.
All right, so if that's the case, how much of that do you think was built into the market with that rally we had before the report came out?
Yeah, I don't think we built in very much of the placement numbers. This was, a surprise even below the low end of the trade guesses. So the placement number is the one that really shocked the trade and could give us even more short covering here on the opening. We just saw a little buying interest, a little short covering in those front months, and that was mostly thinking that it could be somewhat friendly. But this was, a very friendly placement number, and that's going to give us some strength early in this trade. And then it gets down to where the cash trade is going to be, because we were, 179 for the most part last week in the Southern Plains. August futures are right in line with that already, and they go off the board later this week. So they're going to either have to rally substantially if the cash market trades higher, or just kind of, maybe it's already built in. So most of the strength, I think, comes in those deferred contracts.
So October did close half a dollar higher on Friday at 178.82. And the feeders, where there's a lot of, consternation about what they'll do today, September was up $1.40 at 248.52 before that report came out. And then on lean hogs, we had the October up 297 at 82.12 as they had a big rally to wrap up the week. All righty. Well, thank you, Brian, for helping to explain all that. I appreciate all the help this morning. Brian Hoops of Midwest Market Solutions.